because there's a lot of developers out there, a lot of contractors. You want to find the best one and work with them, because that's where money is made, when it's delivered on time, not when they let it slip by 4 months. You lose anyway. That initial relationship started there, and then once we had that person on board and there was that credibility, getting everything else lined up made everything far easier. And of course, after that, it comes down to working with the press, because now it's like that you get into a bunch of articles and all these other things, and it helps reinforce your ability to close deals.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Agostino Pintus is a former Inc. 500 technology executive turned commercial real estate investor who has helped thousands diversify into real estate. He has syndicated multifamily acquisitions, developments, and real estate funds totaling more than $350 million. Agostino, welcome to the show.
Hey, man. Thanks for having me on. Really appreciate it. Good seeing you again.
Absolutely. It was March 7th, 2021. The last time I had you on the show. A couple of things have changed here in the last 2 years. In case those of you who are listening here, that was episode number 98. If you want to go back and kind of hear where Agostino was in his business at that point in time, that'll give you maybe a little bit more color to this episode. We'll use this as an opportunity to get an update, hear how things have changed, how your strategy and those things have shifted. But in case they haven't heard that first episode, in 90 seconds or less, Agostino, can you tell me, where did you start? Where are you now? And how did you get there?
Absolutely. So I started largely in the C-suite. Right. I was a corporate executive, C-level executive running large enterprise IT. Like I'm sure many of your listeners out there are too. I've noticed there's a lot of IT folks in this business. And, the one thing that I've always been since I was a kid was an entrepreneur. So if you're an entrepreneur and you're working in corporate, you can only do that for so long. And I kept on getting fired from every single job I ever owned, right? Or I had rather. And it's not because I was a bad guy or a bad employee. It's just that certain circumstances I put myself in just didn't really lend itself to an entrepreneur being, and companies change, people change. Next thing you know, there's a change in management, CEO change, they hand you the box, get out, go to do it all over again. The last time I did this, let's see, probably about 5 years ago, something like that. The guy who brought me into this company, I rescued the company with him, right? He bounced, he took off, new guy comes in, hates my guts. He wants to bring in his own people. I'm out the door. Everything that I'd done up until that point did not matter. The fact that, they couldn't keep their systems running and stuff like that didn't matter. I'm out the door. So here I am on the road again, pink slip. And I'm wondering, okay, how many more times am I going to do that? Like how many more times can I possibly get canned from a job? Right? How many more times can I do this? So I decided that I'm going to make a switch and go back into the real estate game. I've been doing real estate previous to that, but mostly single family stuff. But I decided to really go big, and it's exactly what I did. So fast forward, what's been for some years at this point, we've done about $315 million worth of stuff, largely in the development world now. We started off doing multifamily. We still do multifamily today, basically acquiring B and C class stuff. We take it, we make it better, increase the rents, make it a great place for the people to live, and just cash flow it. We pay the investors back after 5 to 7 years. We make some money along the way, and everybody's happy. That line of business right now, a little tight.
Right.
There's not too many assets available right now. You have to be very careful about the deals you're getting into. So it really caused us to shift into the development space, which is where we're massive growth right now. So all we have at this point is this line of business, and the third one I'll talk about in a second. But in the second line of business it's development, and what that means is ground up development of multifamily assets. We do that. We do some mixed commercial stuff, but it's usually in the case of a office to multifamily conversion. Like the Rockefeller building is one deal that we're doing right now, $135 million deal. Just that one alone is $135 million. It's John D. Rockefeller's old building in downtown Cleveland. And that one's going to be a conversion. So we do stuff like that, historical conversions. We're doing another one in Rocky River, same sort of deal. And that is really where the opportunity is to meet the demand of housing, because people need housing right now more than ever. It's funny how even in this recessionary time, this market pullback, people still need housing. So we're building that to fill that demand. And the third line of business is single tenant net lease. And this is Dollar General, Dollar Tree, CVS, Walgreens. This is really what I consider to be a large part of our future. And the reason why is because when you're buying these assets in a fund, so we have a fund that goes and buys 10, 15, 20 of these locations, these different locations with a corporate backed guarantee, you're getting a check every single month. It shows up, no fanfare, no COVID nonsense, none of this stuff, no judges saying no one's paying rent now, none of that stuff exists. Just the check shows up, corporate back. How do you beat that? So it's good to have a mix of these types of things. So it's like no matter what happens, even if everything went to zero, you're still getting this cash flow rolling in from our fund. So that's a blind pool fund. Everything else is syndicated. So I mean, to get to this point though, man, I mean, it took a lot of training, a lot of studying, a lot of good, strong partnerships too. So yeah, that's it in a nutshell.
Agostino, that's a lot of moving pieces, man. I love that. And it sounds like to me there is a really strategic reason why you really have kind of this three-legged stool of your business. Can you describe that for me?
Absolutely. So part of what I've learned along this journey is that you really have to keep your eye open for what is happening in the overall market. I'm not stopping with the multifamily. On the contrary, we're still looking for deals. We're still looking at strong deals. The deal has to make sense. That's really what it comes down to. And it just means looking at more deals. No matter what you do, there's always something out there, no matter how bad the economy is, no matter how good the economy is, it really comes down to just keeping your eyes open for the good deals. And that's why we have an education business too. And we teach people how to buy multifamily. It isn't like we're telling people don't buy any multifamily. On the contrary, you need to be looking for deals, because now is when the deals actually start coming up. The guys in our space here overpaid for stuff. They didn't buy a rate cap. And a rate cap is kind of like, think of it as like an insurance policy, so to speak, where they're protecting their payments, so to speak. And if it exceeds a certain amount of interest rate, they're going to get some sort of money from this fund, so to speak. So it's if they didn't buy that at the beginning, they're screwed right now. They paid 3.5 or 3.5% interest rate, and now it's at 7. Man, they're in a world of hurt right now. All their NOI is gone.
Yeah, their loans reset. Yeah, absolutely.
So yeah, it's those are the guys that are going to get hurt, and you have to really understand how to help those guys out. If you have the means to help them out and pick up a deal at the same time, everyone wins in those deals. It isn't like they're losing and you're winning. Most people in this space want to do good. They really, and I really believe that. And if you're able to put a deal together, underwrite it responsibly, and know what you're getting into with your eyes open, that's how you make deals happen. So the three-legged stool is really comes down to understanding where the multifamily market is today. Like I said, we're still looking at it, but development offers, at least for us anyway, a rich way to create beautiful homes, beautiful housing for people, fulfill a need, and to really build some nice long-term wealth along the way. So, and of course, the net lease business, like I said before, that's just straight up cash flow. I mean, the investors that get on that, they throw down their cash. 60 days later, start getting monthly checks.
Right. There's nothing like that. I mean, when you're, I always said in the parking business, it was your phone will never ring. It's like, you just get an AC a month. Great. Done.
It's great. I mean, listen, it's not like you're going to get massively rich off of net lease unless you own the whole thing. Maybe, but it's like, for the most part, it's a coupon clipper. That's all it is. And nothing wrong with coupon clippers. It's okay. It'll pay you way better than what the bank is. It's going to be consistent, and it's all secured by real estate. We still own the real estate. Like, we're not doing like some sort of ground lease scenario. Like, we own the real estate that comes along with it. And the lease. Right. You get the write-offs, you get everything. How do you beat that deal, Yeah,
that's true. That's true. You do get all the write-offs, you get the depreciation, you get all of that stuff as the building owner. That's fantastic. One thing I want to dive heavily into, you mentioned $135 million conversion that you guys are working on in the Rockefeller building. Yeah. Tell us about that. I mean, that sounds like it's got a lot of moving parts to it, and it's got to be an exciting project to be a part of. But I mean, coming into this hot and heavy, 4 years in, doing $135 million building conversion is no small feat. Tell us about that.
It was hard. It was hard. It was hard from the beginning because the at the time we kind of had some knowledge of what was happening in the Cleveland market. Like obviously I lived here, right? And my friend and I, my good friend and partner, we were already buying deals already, like C-class stuff. So we were very well connected with what's going on. Well, the Sherwin-Williams company, they were building a skyscraper right next door, like right across the street from Rockefeller. Like we kind of had it was a toss up between this area across the street from Rockefeller and some other area, which was somewhat undesirable. So we had some I'm not going to call it inside knowledge, but we kind of had the feeling, had the sense that they were going to be building right next door to this building. So I mean, we took a big chance to acquire that asset, and you mix that in with the fact that the seller of that asset, some super old dude, not exactly a very kind soul, very mean, mean, tough guy. And you couple that with other things that made the deal very, very tough to do, but regardless, we got it over the line. I mean, it was a huge learning experience, but the fundamentals still took hold in terms of when you're putting any type of deal together, the team that you get together matters, right? And what I mean by that is I got the best law firm I could find that knew how to manage the asset, or knew how to manage the intricacies of acquiring such an asset. We got a financial group that really knows how to find the lenders and work with all the special type of different equity sources that can make that deal happen. Because hey, listen, you can deal with all kinds of different lender brokers. If these guys have never done a deal like this before, you're going to be screwed. Like if they've never done PACE financing, they've never done any type of other like opportunity zone stuff. They've never done any type of tax abatement type of scenario. If they've never done that before, you do not partner with those people. Not because they're bad guys, because they've never done it. Like these are all the fundamentals that we had learned in our multifamily business, and we applied it to this business, right? It still works the same way, right? Who you partner with matters. Are the guys who are actually constructing this asset, they just did another asset just like it in the same square, like a block away, for Dan Gilbert, the billionaire, right? The same type of asset. Like if they could do this deal for a billionaire, they could do it for guys like us. We'll be all right, So it's a matter of partnering up with the right people. That really helps reduce the risk, because really it's always about managing risk. That's what business is: managing the risk and then trying to bring up the upside. That's basically what it comes down. And if you manage the risk by finding great people to partner up with, that's how you make money.
It sounded like, I mean, when it came to, and when you say that you're a developer, I mean, that piece seems like an easy one. Okay, they did a project just like it a block away. You could quantify or qualify them based on that. What criteria, as you went through, and this is even over my pay grade because I've never attempted to package up a deal like this with so many moving parts, but how did you vet each of those independent, lending brokers? How did you vet those partners and make sure that they were the right person for the job? Because I'm sure that there's plenty of people that would look at a project like this and blow a whole bunch of smoke at you about how great they're going to be, and then maybe not. So how did you vet them and then eventually pick the right person?
So the one thing to understand is, in this market, like any other market, I think this market is a little different. It's even though we're in the Midwest here in Cleveland and New York, for instance, have a lot of ties. And if you've been to New York before or done any business in New York, those New Yorkers are pretty cutthroat. Right. Mm-hmm. These guys are the same way. Right. I think just because of it's, I don't want to go into a history lesson here, but I'll just say that.
Right.
Reputation matters. And up until that point, Kenny and I built this reputation of being closer. We never screw people over at the closing table. We don't retrade. We don't pull some stunt like, hey, if you don't give me an extra $10,000, I'm going to sign this contract with Spectrum. That's happened to me, by the way, right? Extorting an extra 10 grand on a $4 million deal. There's guys like this, and they think it's okay, right? Word gets around. So I don't do that to people. I would never do, and because I would never want that happening to me.
Sure.
Right? It's basic business stuff, like professional grade stuff, right? Well, that matters, because here's the thing. None of these partners, if you call them up and they think you can't perform, they won't call you back. They won't talk to you. So the first thing is really, are you representing yourself as a deal maker?
Yeah.
Because if you just come out of nowhere and you say, I'm going to buy this building, you start calling all the top guys in the city. If they don't know who you are and what you're capable of, they won't even call you back. Right. That's the first part. So that's why, again, by getting into partnerships, by getting into sort of groups like in our accelerator, for instance, if one of my students said, hey, I want to go buy that building over there, chances are I would probably be the first one reaching out and then pass it on to the students so they can keep it going. Right. Because people know who I am, and or they can do a quick Google search and find me, and they understand, oh, okay, this guy has really done deals before. That's why you get into a mentorship type of program.
Sure.
But in the sense of how we actually met these folks, part of it is also bringing on the right people at the onset that know all these other folks too, or at least can already have some sort of how should I say, a foot in the door, so to speak, right? So we had a foot in the door with the actual contracting company, and this is not just some rinky-dink contracting company. This is one of the biggest contracting companies in the Midwest, and they build a lot of this luxury type of stuff, and they do it very, very well. And they always deliver on time, because there's a lot of developers out there, a lot of contractors. You want to find the best one and work with them, because that's where money is made, when it's delivered on time, not when they let it slip by 4 months. You lose anyway. That initial relationship started there, and then once we had that person on board and there was that credibility, getting everything else lined up made everything far, far easier. And of course, after that, it comes down to working with the press, because now it's like that you get into a bunch of articles and all these other things, and it helps reinforce your ability to close deals.
Yeah, no kidding. That's a part of it I probably hadn't considered, but I would imagine that a project like that would be fairly high profile.
Yeah,
there in Cleveland, and getting the press involved would be a pretty smart. Obviously, it was a smart thing, guys, to do. What would you say were some of the biggest lessons, both good and bad, maybe that you learned on that project?
Well, I think I would say that you always have to be prepared to deal with some really tough folks, right? And if you're not prepared and you're going to lose your cool, you're going to have problems, right? By definition, I am a hard charging type of guy, and but one thing I'm never is difficult, right? I'm always super, super, super easy to deal with until it's time to get hard, right? And that's really the basic rule there, is that you should always be easy to deal with in every deal, not just this one, in every deal. Always be super, super easy until you have to be a jerk. And then you can take that card out, right? Because if you're going to be an idiot right from the beginning, no one's going to want to do business. Right. There's a guy right now that he's talking to me about acquiring one of our deals, and he doesn't have a good reputation, so it's kind of like it's going to be very tough for him, to find lenders to work with people, so we'll see how it goes, right? I don't know. No, we'll see.
Yeah, man, your reputation will precede you, and it's amazing. And you'd think that in the commercial real estate space in the United States, there's a lot of commercial real estate in the U.S., but it's amazing how small the world gets. It's like, wait, this is it's pretty funny. So your reputation certainly will precede you. I like that.
Oh man, I'll tell you a story. There's a guy that he was supposed to buy a big multifamily deal, and he committed to buying it. He put $250,000 of money in earnest money, right? And he was working with the seller. And they have this cultural thing of being like total hard asses all the time. And when you do that, again, if you're going in hard all the time, you're never going to get a deal done. And it came to the point where this is a $15 million deal, and they're arguing about $50K. They're arguing about $50K on a $15 million deal. Okay. In the end, the guy not only lost his $250 because he couldn't close, he didn't close the deal. That guy's reputation in this market, he wasn't in the Cleveland market. He's an out of towner from California or something. He burned his whole reputation in this whole city, because that broker talked to another broker, talked to two other brokers from two different firms. Those two guys talked to a bunch of other folks. Next thing you know, he's done. He's never buying a deal here ever again. He's finished.
Right.
He's finished.
That's it. You said it, man. And that's I like that idea of being easy to deal with. And to your point, that does not mean that you're a pushover.
No,
it means
you're not a pushover.
Like, I know where my bounds are. My boundaries are, yeah, but you don't have to go in guns blazing in every
No,
conversation. It's like it's just not.
it's good karma, man. You know, it's like there's another guy that we bought a deal from. He's known around town as being a jerk, and it's like nobody wants to deal with him, and everybody has like bad ill will towards him. And when you look at the guy, you hear about it. It's like he's in poor health. He is a bad dude. No one wants to be around him. It's almost like a smoke that surrounds somebody. You know, it's like nobody wants to be around that person. There's no in this business. There's no reason to be mean or bad to people. There's no reason at all. There's no
None at
reason.
all.
It's business, you know, and everybody, you want everybody to make money. I want the guys that I do business with. I want them to be successful. I want them to make money. I can make some money and everybody's happy. If there's no money to be made, let's not do the deal. That's all. It's easy, right?
Absolutely. Absolutely. So that's one thing that I would write down that you've taught us today of things to do. If you reround the last 4.5 or 5 years or so, what is one mistake you could help our listeners avoid, maybe that you've encountered?
This business is built on partnership and all partnerships all the time. That's how this is done. And what I mean by is that one of the biggest hurdles many people have is I can't find the money. I don't have any, you know, all this stuff, right? Well, the money, guys, the money comes from other people. Right. Okay. That's where the money comes from. The money comes from the limited partners that believe in you and they trust you to make a good decision. Okay. But then you have the general part. The general partners are going to be the ones you're talking to on a fairly regular basis. These are the people that you are working with and you're giving your all to. When I approach my partner, I always approach my partners making sure that they get fulfilled first before I do. So let me repeat that. I want my partner to get his first before I do. I put the partnership first. I don't go in, what's in it for me? What's in it for me? Where's mine? No. Incorrect. The real thing to do here is to always put the partner first. And that's where they screw up. They make it about themselves. Like, I have a deal and I want a part of it. I want 4%. Screw you. I don't need your deal. I don't need it. I don't need to take it out. I want 4%. I want you to raise all the money. Go. It's like, well, hold on a second. No, I'm not doing that. It's like, I want to work. I don't want to work with people. Right. And that's the big secret that many people are not aware. And in the same vein, I don't want to partner with that. And if you partner up with someone like that, they're going to make your life not so much fun, you know, because next thing you know, they're going to be pissed off about something and now you have to deal with it. I'm not worried about losing money as much as I'm worried about losing time. You know, it's like, fine, some idiot tries to soak you for $10,000 because there's nothing better to do. Right. It's the fact that now you have to call attorneys and deal with whatever nonsense these people bring up. Right. So who you partner with matters. Is my point. Right. Who you spend the time with matters. Who you let inside your brain trust matters. And if you let the negative people in, if you let bad partners in, if you get someone who's not nearly as driven as you are in your group, you're gonna for a world of hurt.
Mm-hmm.
Right.
Absolutely.
That's really what I learned, man. I mean, it's like now I really have one partner left from when I started this business, and he's an amazing dude. This guy, he's crushing it, and he's awesome. You know, and I talk to him every single day and I help him. He helps me. I help him with so much stuff. I never ask for anything in return. I help him on other deals that have nothing to do with. I help him out anyway. I help him raise money. I help him do whatever. And I don't care. That's my approach. I don't care because I know that down the road, like when we're 90, we'll still be talking to each other and we'll still be doing deals then. That's what it matters. It's kind of like if it were your family, well, how would you nail your brother for 50 grand to help him out with a website? You know, would you really do that? Like if you look at it as a family,
right?
That's a different perspective because you always get yours right back.
That's awesome, man. That's the giver's gain, and certainly appreciate that insight as well. That's absolutely great stuff. I'm trying to think of who I had him here on the podcast. Is it The Go Giver? Is that the name of the book?
Yeah, the Go Giver guy. Yeah.
And I'm drawing a blank. He came on the show actually twice, which was great. Absolutely loved having him, the gentleman that wrote that book, on the show here. But that's a great book that kind of emphasizes and highlights exactly the things you're talking about. It's that go giver mentality that you can't ever outgive, I don't think, more than what you get back in return. So that's really, really cool. Agostino, thank you for taking the time to come on the show today. You've done a lot here in the last 4.5 or 5.5 years. Maybe you know it, maybe you don't, but that's a lot of moving pieces and a lot of insight and wisdom that you've gained here over the last few years, and some really cool ways that you've taken care of yourself and your investors. I love the three-prong approach of the things that you guys are investing in, where you guys are finding opportunity. Very, very cool stuff. If our listeners want to get in touch with you or learn more about you, what is the best way to do that?
Bulletproofcashflow.com is the best place to start. Start there. We're all over social media. We put out material all the time, and we even have a deal maker club, our cash flow deal maker club, where we help people get into deals and stuff too. So kind of like share knowledge about this stuff. So totally free to join. All this stuff is totally
fantastic. Thank you so much. Look forward to connecting again here soon.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.